We're going to take a look at currencies, stocks, options. Big reversal yesterday with the news. The market survived the CPI news. It wasn't great, but the market didn't take it as such. So we're going to see if those bulls are really serious. I had some interesting statistics yesterday with volume, and let's dive into it for today's bull report. So let's begin with a risk disclaimer. We understand risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. If you're following me out there on social media, make sure it's the real me. Mondays and Fridays for the Pulver Report, youtube.com/Chris Pulver. Also, make sure you subscribe to the Beyond Capital Group channel. Facebook, Instagram, Twitter, TikTok, Real Chris Pulver. I will never send you a message directly unless you send it to me first. I'll reply, but I'm never reaching out first to solicit. That's a bunch of nonsense, and those are scammers. So get rid of them. All right, let's dive into the charts. Here's currency strength. Looking at this morning, I saw the dollar was on top. Now it's starting to drop pretty nicely. Dollar and yen both dropping. Euro's on the rally. Pound is on the rally after a mega day yesterday. Pound had a huge surge yesterday, by far the strongest. And we're going to see if we can get the pound to also, maybe close some of this level, get back to baseline today. Looking at pre-market on the SPY, we closed at 365. We're looking at 369.51. I'm going to go to the futures dashboard for a moment. Some of us might be wondering, why did the market do what it did yesterday, considering the CPI was not good? Well, let's talk about it. Would it make sense that there's, several $1 trillion on the sidelines needing to get allocated? Yes. Would it make sense that for the last 10 months, the market's just been beat up by inflation threats and beat up by everything that's bad news, and sentiment is so bad that the market can just not go down a little bit? Yeah. So, maybe it's a little Hail Mary by the bulls at this time. We're starting to see that this low might be more significant than what we let on. We also did make a nice flush down to 348. So it's not like we just tested the low. I mean, we closed below it. We closed below it 3-4 times. We gapped below it. It was one of the wilder mornings. I mean, in the flex room yesterday, we were looking at pre-market SPY. It was at 359 or 360. Literally during the CPI announcement, it dropped all the way down to 350. So we had this massive flush in futures. We looked at it on the charts yesterday. The dashboard was just like it jumped off a cliff. And for the rest of the day, it spent all of that time looking to fill the gap. And it did that and then some. So the fact that we had, pretty big market breadth yesterday, we had one of the larger single day swings. I mean, this was close to a 5% swing on the day. So from low to close, 5.4% from low to high. That's a pretty dramatic move. I mean, a lot of times a big day in the market's 1%, 1.5%, 2%, right? 2.64 is how we closed up on the day, but it was over a 5% move just from low to high. So like I said, we're at 370 pre-market, futures dashboard, looking to see that things are pushing higher. 1.12 positive on the Dow Jones futures, S&P 1.20, NASDAQ 1.25. Do want to keep an eye on the dollar, right? The dollar index, I mean, that was one of the big correlations I'm looking at. Dollar index is starting to cooperate a little bit more to the downside. This was news from yesterday. So we had the big spike up on CPI, and then it finished the day lower. Had a little strength in the morning, but it's starting to give it back here in the last couple of hours. So that's not a bad thing. And look at it from the higher time frame. These chart alarms to the upside have not gone off. Chart alarms to the downside have not gone off. We had a lot of chart alarms yesterday that were activated that were gaps lower, but a lot of those filled. Look at the heat map from yesterday. This is pretty interesting. Look at the scanner from yesterday. Let's see if it'll show. It's not showing it. Fudge. I was hoping we could see it from here. I'll look at maybe the 1 day performance. Let's do the 1 day performance. That's not going to show it. Let's go 1 week, I guess. Let's see what it's done so far this week. Well, it's not what I wanted. Let me see. Do I have an email from StockTwits? Let me see if it shows the heat map. StockTwits. What the flip just happened? There it is. Yep, I got a screenshot right here. Let me take it and I'll post it. And then let's log into YouTube and say hi to everybody. So from technology to consumer defensive to energy to healthcare to financials, for the most part, everything had a pretty good day. So Amazon didn't quite make it all the way back up to close, but Tesla up, Microsoft up, Apple up, Google up, Meta up. Again, most of the market advancing. So that was yesterday's heat map. Pretty interesting. Okay. All right. Let me get logged into the channel. Say hi to everybody. Nice that you're all here. YouTube.com/Chris Pulver. And YouTube.com. All right. So we have DW in the house, Gary in the house, Moach in the house. Peter is here. What's happening? Daniel, good morning, sir. Steve, good morning, sir. Linda, Craig in the house. Nice to see you. Donna, good morning. Jason, good morning. All right. More stable pound as finance minister sacked and replaced by conventional thinker. Okay. Kroger, ACI, and talks. Yeah, let's have a chat about that this morning. We can look at it right now, but let me get Benji up here on my lap. He's finished with breakfast, so it's time for him to sleep. Yeah, Greg, good morning. So if they're in talks, that's awesome. I mean, I think that'd be a nice little symmetry for your local neighborhood grocery chains. Here's ACI. So KR is Kroger. Big volatility there. Spikes up towards 48. ACI is Albertsons. Big advance on Albertsons. We're pulling back a little bit, but 28.63, 27.49 pre-market. I do have a covered call for next. This has to be the 21st. That's next Friday. So 1021, $30 covered call. There is a chance that I could get the stock called away. Let me set a chart alarm here at 30 bucks. That would not be bad. Got a couple thousand shares I'd like to get rid of, 24 and change. Also, if it doesn't get called away next week, or I can possibly roll it another week or so, then great. I'll lower the cost a little bit more, maybe make $2, $3, $4 a share. But I'm going to get that one surrounded. So yeah, big advance there on ACI and Kroger both. SPY again pre-market 369. Let's see if we can boost above 370. Also, I was long this week on the SPY. I had a 385 long call. I paid $1.85 for it. I paid $1.79 for it, another account. And I'm watching the price closely. If we start to advance above 370, 375 going into next week, this is going to be worth probably $4 or $5, and I might just take the 2-to-1 reward to risk. And I mean, I have some time, but I don't really want to go too much further. If it advances quickly, I'm trying to get every bit of that I can. So if it's up to $4 or $5 credit in the next day or two, maybe today, if we have another big advancement day, then I might just take the profit for a close. Okay, Ever, good morning. So yeah, that's interesting on Kroger and ACI. Do you have a news news headline or anything on that, Donna? Are they in discussions for real? Right there it says Kroger to merge with Albertsons companies and all right, well there you go. So that's great news. I'm not sure what the timeline is. It doesn't really matter. I'm liking the fact that both stocks are advancing. So good with that. Okay, let's take a look at some other things. VIXI is coming down a little bit. The VIXM was up to 36. It's pulling back pretty hard. The SPY, big move to the upside. We're going to see what that's made of. Apple was down to 136. Now it's up to 142 and change, 143 almost. Let's just look at everything. Tesla had a big jump yesterday. 208. I've got it covered out to the next 2 weeks at 295. I'll lower this down to 270, 275. If I can get Tesla called away for, $5 or $10 a share, I'll probably just try to flip it or lower my cost basis and hang on to it, and try to time this a little bit better, right? I mean, if I'm lowering my cost basis pretty actively in this gap area around 260, currently my break even is 269. I'll lower my break even below that. I mean, I'll try to do some more credit spreads here, sub 200, 180. Potentially down into this 150 area where we have this yearly pivot, 166, past resistance becomes support stuff. Yeah, I'd like to look at some more credit spreads on Tesla, maybe measure some symmetry here. If we have let me look at this move here. So if we had a high to low, lower high to lower low, look at some symmetry, find some support. Even if I trade the channel, we advance halfway. There's a nice little midpoint that I'd be looking for profit. If we advance all the way back up, that's great. Try to lose this stock towards the top of the channel. But Tesla's one that I'd like to own for a while. But it's volatile enough and the premiums are high enough that I don't mind getting back in. Getting back in, take profit, get back in. I mean, let's make some money. All right. What else? Bitcoin trading at 19.7. So a pretty big move on Bitcoin yesterday. Maybe it got some people excited. Structure-wise, it hasn't really broken out yet. I'd like to see Bitcoin advancing up above, 20K. we start to break into this area, I think that is a risk on rally. We break into this open space. Bitcoin rally is contingent on dollar weakness, which I think is true. I think equities rallying is also contingent on dollar weakness. The one thing we talked about a lot this week, I was just making traders understand that the 2-year treasury yield needs to go down. Okay, so this could be an interesting time where we have some nice divergence at the top. And if this 2-year yield starts to print larger bearish candles and starting to retreat, pivots to the downside past resistance, we've got structural support on those automated trend lines. Again, if it's going to behave technically. I mean, yields percentage-wise on a percentage basis this year are just off the friggin' rails. Here is the start of the year. Okay, it's up 500%. That's insane, right? I mean, yes, the central banks have made a mess of the markets, and there's all sorts of wild stuff going on with central banks. There's stuff, I mean, with inflation, we know that's not really changing. I am wondering at this point if the market, and this is what we can look at right here, the Fed Watch tool, that's OPEC, here's Fed. The Fed Watch tool, I want to see if the market is changing its tune at all. All right. So the November rate decision, still expecting 75 basis points. It's built into a 97% probability right now that, again, not this month. The Fed already had their minutes, didn't really say anything different. But this 75 basis points hike is due for November. And December was planned on a 50 basis points hike. So here we go. 3.75 to 4.5. So that's a 50 basis points hike, higher probability right there. And then February was a 25 basis points hike, and March. So they did give March another nudge. No, they didn't. 4.75 there and 4.7. Okay. So March possibly has another 25 basis points built in, but that's not the highest probability. Highest probability for March right now is still a pause. So if they do raise rates in February, it would remain in March according to this tool. So that's what we continue to watch, and I've said this is the pause. This is the Fed pause right there. Now, the only other thing I could think of, if the Fed, number one, is going to change the target again, then all this changes, right? It all doesn't matter. Equities goes down. The Fed squashes the market even further and crushes the consumer even further. But if the Fed pauses what the market is interested in pricing in, and the market realizes that the Fed can't raise rates to, extinguish inflation, and it certainly can't do it with energy, then the Fed might just alter their inflation target. So rather than trying to convince the world that the Fed wants to be back down to 2%, maybe it says we need to learn how to operate at 4 to 5%, right? We're sitting at 8% right now, right? I mean, that was the print this week. It was like 1% better than the last month. So we did the math. It's like we stay on this pace, and I know we only use a couple months, but we're like 5 years away from having 2% inflation. We're 3 years away from having 4 to 5% inflation. So if the Fed, this in a way could be titled the pivot. I mean, if the Fed pivots their inflation narrative to something totally different that matches maybe where the Fed is at fixed rate wise, or the official funds rate, right? I mean, maybe it matches, as opposed to, I mean, if the Fed funds rate is 4%, 4.5%, and we do have inflation down at 2%, that's crazy. Like, the Fed does not want to service debt at 4 to 5%. I mean, they don't. I mean, we're spending so much money as it is. So that's why, I mean, I think that the market maybe senses that. And the Fed isn't being explicit on what they're going to raise rates to. They just say they want it to be restrictive. So anyway, the narrative is what's driving the market, but I feel like the market is starting to lose its patience. And furthermore, it is Q4. And so even if the excuse for the market is it's Q4, who cares? Just buy. Look, there's enough money on the sidelines to be relevered and reallocated that this market goes up. And it would go beyond rational thinking. It would be like, oh my gosh, does the market not care about inflation? No, it does care about inflation. But for right now, maybe the next 3 months in performance is more important than reality. And that's why they say that, the markets don't necessarily reflect the economy. It doesn't reflect reality. It doesn't. It reflects sentiment. And if there's so much beaten down sentiment and it's just a desperate attempt to see something bullish and try to save the year or salvage the year, which has been a terrible year, right? For most savers and most people, unless you've been a permanent bear, it's really just been all about protection this year. But if there's something to save the year and get this market to rally, I mean, it doesn't matter. It doesn't matter what inflation is. It doesn't matter what the reality is. It doesn't matter what OPEC and the Fed is doing. It's like there's money on the sidelines to be reallocated and relevered in a short-term basis. That Q4 might be decent, right? And we finished above these highs. This is the fight back that the market is known for, and we'll see where that goes. And that goes through the midterm election. I know that's coming up in November. I'm not discounting any of this stuff, but sometimes the market ignores a lot of that, puts the blinders on, and just goes. And if that go right now is off of yesterday's advancement, and we build bullish off of that, great. I certainly wouldn't mind seeing it. You know, question is can I profit from it? Can I clean up, my own portfolio? Can we take some profits? Can we, lower our cost basis like crazy? Yeah, I think we can. If the market advances, I think we're gonna have a lot of great opportunities. Okay. All right. Thanks, Donna. Thanks, Donna. I appreciate that. Yeah, we'll throw in that thumbs up for me, right? Get the channel likes, get the algorithm to be like, oh yeah. He's got 50, 60 watchers. Let's get 40, 50, 60 likes. It's not that hard, right? If that's your one effort for the mornings to come here and watch and just click that thumbs up button, easy peasy. All right, let's take a look at some currencies. Let's go to gold and silver and then look at some currencies. So the dollar, if we're going to get a turn on the dollar to the downside, I think we get a turn to the upside on gold. Not there yet. So I want to see if the dollar does sustain a turn. Do we break back above roughly, 1680 to 1700? If gold can retake that level, I think we can look at a bit of a low being put in on gold. And silver got squashed really hard, but still hasn't broken the low, still hasn't broken the high. So I'm waiting to see how this one plays out. We have not taken out this intermediate low. We have not taken out this low yet. I'm not sure if it's going to, but we've had 1, 2, 3, 4, 5, 6. I'll even count those. That's 7, 8 candles from this peak. If we get 8, 9 candles lined up, that would almost justify a little bit of a move to the upside. And if it's correcting like this, I get it. Maybe it corrects all the way back up here and then still heads lower. But again, this is going to be dollar related. Okay, some other currencies, currency strength chart this morning. So JPY, dollar, Euro's making a rally, Swiss is baseline, New Zealand, Aussie baseline, pounds on the run. So pound, again, big day yesterday. In a way, it had some room to give it back a little bit. And so I want to take a look at those pound crosses this morning. So pound Aussie, we had a nice run up towards 8,100 plus. Traders were following along. I said yesterday, and this happened during our flex trading room. We were trading around 79.20. I said, I know I hate buying it here, but if you're following on the short-term time frame, look for it to go to 80 or maybe come back to this low here around 81. What did it do? Came back to that 80 and came back to that low at 81. So there was an opportunity to protect some profits yesterday. We are getting a pullback. I'm going to look to see if it just pulls back shallow. Does it pull back shallow and continue to go higher? Does it pull all the way back to where this first dip was around 75? That would be a lot of volatility on pound crosses, but probably good for some short-term activity if you're following those alignments on 1 hour time frames, 30-minute charts, 15-minute charts. The pound is delivering some really solid day-to-day volatility. Pound Canadian, this one went up to 56 and change. I'm holding on to this one towards 58 to 1.60. Again, pullback wise. Maybe it's just a little bit of a pause. So we had a nice 2-day rally, a little bit of a pause. We continue it all next week. I'm looking to hold to those profit levels towards 1.60. We pull back into the same levels. I'm looking to fill some dips, and I'm still looking to go long. Excuse me, on the right side of the trend line especially, I'm looking to build off this flash crash low. So I'm still long on pound CAD. I'm still long on pound Swiss. And I'm going to look to hold that. So a lot of these trades in the pound crosses will resemble pretty similar technicals. If they, pause after a 2-day run, pause here, and then more upside, or a pullback first, find some equal levels, and then look to see if that's a low, high, higher low to higher high. So we'll see if that pound run wants to continue. Pound yen. Pound yen, it came up to 167.20. Chart alarms were set at 168. I was going to sell at 168 to 168.50 up in this area. Didn't quite come high enough for me to sell. Again, we did take a nice buy trade this week. We got a buy trade in here, stop loss below, and ended up grabbing about 300 pips yesterday. It went a little bit higher, but still happy we protected the profits yesterday. So that was like 307 on the pound yen. Robots killed it this week. I think for the week I'm up over 2,000 pips. 3 robots and then like 300 or 400 pips with some discretionary trading. So never going to complain with a week like that. Pound New Zealand looking for resistance around that 2.02. We hit it. And again, that was the same thing. We were trading at like 199 and change. I was looking for the round number at 2. Got to 201, 202. And it's just retreated. High volatility stuff. But look left on your charts. You can see the structure. Plenty of resistance here between 202 and 204 on that pound New Zealand. Pound US dollar. Pound US dollar. If we have low, high, we're going to see if this maybe wedges a little bit, shows some indecision. I'm going to see if the bulls can step in, especially with dollar weakness. If there's any dollar weakness ahead, then I'd love to see the pound dollar reclaim these highs. Extensions we were looking at from a swing this low to this high, I'm looking at a 1.8 to a 1.27 extension. If you drag a Fibonacci here, looking for that 1.8 to 1.27, take some profit in this 119 to 120 area if you're long on the pound US dollar. Okay. So that's what I have on those pound crosses. Dollar yen, the BOJ intervention. Where are you at, BOJ? We're trading at 147.84. We're nearing that monthly symmetry. We have daily, weekly divergence. The BOJ candle high has been broken. So does that mean that I'm long at this point? I'm not. I've got to trade in at 147.50. My next trade is at 150. So if I'm going to add anything to my dollar yen, it's going to be over here on the right-hand side of the trend line. You know, this bar count is freaking nuts. It's over 400 bars on a daily time frame, which is insane. And at some point, I just, you know, I mean, I can't fathom that this isn't a either Q4 or a Q1 move, right? Is it end of this year with a big rally in equities? Does that kind of top the dollar out, or is this something that pushes all the way into Q1 of next year, and all of a sudden we have this massive correction? I mean, either way, like this 200 EMA, this red ribbon that this red exponential moving average I have should be hit. It's just how long do I have to wait? And right now, I mean, this is my confirmation. I clearly don't have it. So I'm trading small. I'm patiently waiting, and hopefully we're not heading too much higher. But once we get on the right-hand side of the trend line, I'm watching. I thought we had a nice little BOJ intervention, and I thought we would break the lows and start to proceed. BOJ has been pretty silent. I think they do have a rate decision coming up. It's 2 weeks from now. If I go to Forex Factory, they're right on top of the ECB rate decision. This goes out to, let's go next week. Is it the end of the month? Yeah, so we have Bank of Canada on Wednesday the 26th. We have the Eurozone, the ECB on the 27th, and BOJ the 27th into the 28th. So we still have a press conference outlook statement, possibly some intervention there, maybe. But again, I'm not. That's not the thing we should count on. We shouldn't count on the Bank of Japan to come to our rescue, even though they're doing some really radical stuff right now. So anyway, watching the dollar yen. Otherwise, I mean, the other yen crosses, you know, Aussie yen. I was encouraging traders to take some profit on this trend line break. You know, it's been supported right here off the 200 EMA. The CAD yen, we have not broken this low. This actually has been holding very structurally. Have not broken this support. This is the BOJ candle. So we haven't held here. We're at 107 and change. You know, I'm looking for this high to low. Do we have a little correction coming here? And then do we actually have it proceed lower? So, you know, is it going to be a lower high in this area, or is it going to come all the way back up to the same high and then just be another range? You know, I'm not sure. I mean, we had equal highs here, chance to sell, right? I mean, we could do the same thing again. Another equal high, chance to sell that back down towards this 104.50 area. So we'll still watch the structure. You know, resistance on pound yen, euro yen at highs, New Zealand yen off of lows. It's kind of been all over the place, but the dollar yen is really the barometer I'm watching. Euro Swiss had a decent run yesterday. Hopefully we're ready to trigger some of these alerts to the upside. I have some stacked orders all over the place. I've got pullback trades, buy stop trades to the upside. My target here is 103.50 and 105. I just want to see how this one makes its run. I'm looking for a bullish pattern to emerge. This is the high I'm watching. So if this is, you know, taking its time, but it comes up here to poke this high and then pulls back, I'm looking to buy these dips and take this up for a swing. into this, that's my profit target. Okay. Now, if it doesn't pull back and it just keeps going higher, that's fine. I'll just stay with the trade and I have buy stop levels, but I'm going to be ready to add some here, add some here. If it pulls back more, I'll add some here. But I'm actively looking for a bottom in this Euro Swiss. Okay. I'm also looking for a top in the DXY and 2-year and 5-year and 10-year and Treasury notes. Right. I'm going to look at those yields and see if the dollar is going to top out and see what that see how the market interprets that. I do think that we have to have rates top out, dollar get weaker in order for equities to rally. Oil might be the wild card. Oil's at 87.42. It's been pretty quiet this week, all things considered. I mean, a lot of volatility on other crosses in other areas. Large cap tech getting some love this week. Energy, for the most part, is up the last 2 weeks with that OPEC cut, but here we are, pulling back, retreating towards 87. Again, what do you have to watch? If there is bid on oil and this heads back and takes out the highs at 95 or 96, this is probably heading back into triple digits, right? This is the OPEC versus the Fed. This is chicken, right? I don't think OPEC is going to swerve. I think the Fed is going to swerve. So this is the video that I talked about with Beyond Capital Group with Jared Johnson. We talked about this. It's like it is a game of chicken. You have a movable object, an unstoppable force, but something's going to swerve, and I think it's the Fed, not OPEC. Again, both have the ability to change their opinions, but I think the Fed, in this case, it's like they're not going to win. You can't raise rates to tame oil prices. I'm sorry. You can make people go broke, so they're like, I guess I can't afford to fill my car up with gas anymore. I can't drive anywhere. I'm unemployed now. It's like, yeah, I guess you can do that, but it doesn't really seem like the common sense, logical solution as far as economics. It's like, look, if we have higher energy prices, we have higher energy prices. So what do? I mean, if there's fiscal policy, which would be government related, start firing up some pipelines, start producing more. I mean, that's what got us in trouble in the first place. We went from energy independence to now very dependent and a really, bottlenecked global economy. So anyway, those are my thoughts. Anything else? Any other currencies you'd like to take a look at? We looked at pound crosses, the dollar, the yen, the dollar index, Bitcoin. I'm just going to go back to the SPY. Pre-market, it's 932, so we're at 368. Let me check something really quickly. I'm going to get logged into my little Schwab account here. I'm going to log in and see what my my 180 or my 385 long call is trading for. I am curious. MARA, yep. So MARA is our North American miner. Nice little rally there, 1157. I still have this one covered out to next Friday at 25. I'm gonna keep covering it up into my break even now is 2171. So probably the next one, after I get through next Friday's expiration, I'll go out to the 28th if there's any credit for it, or just keep it up here at 25. If we see a decent rally in Bitcoin, then this stock should have no problem getting back to $20. The level I've been looking at is right here. This high is $32. So what I'm trying to do is keep my, my covered levels in here. So if it gets called away, I get paid pretty nicely. Lower the cost basis over the next couple of months. But if we get a decent surge on this one, back here towards $18, $19, $20, those premiums go up dramatically. And if we actually put in a low here, and this is, some consolidation, if we go low, high, and we start to get some breakouts to the upside, I would look at symmetry up here into the mid 20s. So, premium should certainly increase if that is the case. But more importantly to me is, yes, I have the stock of MARA. We have some credit spreads on Riot as well. I'm long, Bitcoin. I'm long Ethereum. I'm long GBTC. It's like we're looking for some type of rally. Bitcoin may not break into new highs. It might not start turning the corner for this big permanent rally again. But even if Bitcoin goes back up towards range highs at 25,000, that's enough to possibly bring MARA back into the 20s. And there's still plenty of levels back here. I mean, that pocket trade, that supply zone is around 28 to 30K. I mean, I could see, equal lows, a range back to 25 or 26. We could have a range. I mean, that to me makes sense. We're going to carve out this longer low. But if we start to work our way back through 30, I think this might be an interesting, bottom. We might have this weird double bottom kind of head and shoulders where it looks like here's the neckline. We might have some more consolidation coming over here, but again, kind of actively looking for a bottom to be forming here in Bitcoin. And I do think if Bitcoin forms a low and starts to rally, we will see equities rally on top of it. So I don't think it's going to be isolated. I don't think Bitcoin's going to run all on its own. I think if we're going to get a rally, it's like dollar weakness, Bitcoin, equities, bullish, right? Dollar will be softer, more than likely. Okay, E-minis, YM, what is that? Oh, the Dow minis. I mean, yeah, same thing. Look, we were looking for. I mean, I'm looking to see if the bulls are going to advance again today. That was a huge move yesterday. S&P E-mini futures advanced big time. That 8:30 announcement dropped a ton, and it just spent the entire day filling the gap. Dow futures, if you look at the DIA, look at the DJI. I mean, they're in the same area. We tested the low. We tested the low. I mean, here's where we're at. We're at 30,293. I would be looking for price to advance above here. We get a close above this level. I think this market is doing what it can to put in a bottom for Q4. We put in a bottom, we advance. We have room to get back to this level. That's another potential resistance point by the bears. But if we break and advance here, I think the bulls have enough power in the near term to even pull it back into a channel. Right? I mean, realistically, this market, for the most part, has been pretty technical. I mean, if you connect these highs, I'll use this trend line on the chart here. You connect these highs right in here, okay, and you connect these lows, that's what I would be looking for, something like that. So where do we advance? I mean, the bulls can take out this level and they can advance all the way up towards 32,000. And it still doesn't make this a bull market. It gives us a nice little recovery, gives us a nice little relief rally for Q4. But, that Q4 rally might feel warm and fuzzy, but Q1 next year might take it back again. But if there's profits to be made, that's what I'm looking for Q4 rally. So I think a lot of these set up very similar. You have, highs and lows in the channel. We've been in a correction. The Dow Jones has officially crossed that 20% level. Where are we, by the way, from high to low? Are we still in the 20%? So from high to lows, we're at 22%. Right now, we are not. So we're at 17.4, which means we're not technically in a bear market any longer for the Dow. Okay. So does that mean that we are no longer in a bear market? Well, we're clearly in a deep correction. But in order for the bulls to take control and kind of show us technically, we just need to close higher. We close higher, we take out this level from last week. I'm looking for this to advance. Like I said, little bump right there, a little speed bump by the bears with past support, but I think we have room to run towards 32,000. And it doesn't matter. Like the Fed won't change this. OPEC won't change this. The midterm election in November won't change this. If the market is determined to have a Q4 rally and just desperately throw, buying interest and money at the market to allocate it in the short term, it could be a concentrated effort from big money to just go somewhere. And we've had a pretty horrendous, Q3, Q1, Q2, Q3 have all been terrible. Q1 was great for me because I was, long inflation, but Q2, Q3 were holy crap, we got to protect everything. Make sure you're hedged, make sure you're covering your butt, and then Q4 might be a little bit of a rescue. But again, bulls have to prove it, right? Bulls have to prove it. So those are my thoughts. All right, everybody. I'll let you go. Happy Friday. I'll see you next week on Monday, Friday for the Pulver Report again. I will be packing back up, heading back out west for pretty much the rest of the quarter until holidays. So there'll be some adjustments to my trading rooms, but business as usual next week, Mondays and Fridays for the Pulver Report. Again, I would encourage you all to also check out and subscribe to the YouTube channel I'm contributing in with the hedge fund Beyond Capital Group. We're not at 1,000 subscribers yet, so you just have to type in Beyond Capital Group here, but we just had a video go out this week. So there's my face, there's Jared's face. This is the video we just did. Fed versus OPEC. And then we did also one on day trading that should be dropping today. We're going to do day trading, swing trading, position trading, talk about some reaction stuff to CPI, what we're looking at this week, and going into next week. So I appreciate you subscribe to that as well. And for this channel, for everyone watching, hit that thumbs up button for me and support the channel, all the good stuff. And yeah, if you're looking for free education, looking for live trading, here's a good place to get it. Check out those other videos I have in the Trading 101 playlist. Support resistance, leverage, margin, trade size, adding to winning trades, price patterns, all sorts of timeless education. If you ever want to know more, just ask me, and I'll make some more videos. Okay. All right. Thanks, everybody. Have a great Friday. Have a great weekend, and big football weekend too. See what happens. All right, buddy. Take care. See you next week. Bye.